In this video, we're going to review some of the assignments in Chapter 11. The first two deal with discounts. So let's look at 11-2 first. Merchandise was purchased on account from Jacob's Distributors on May 17th. The purchase price was $2,000 less a 10% trade discount and credit terms of $210 net 30. So number one asks us to calculate the net amount to record the invoice less the 10% trade discount. So this problem has both a trade discount and a cash discount. So let's think about the rules for a trade discount. Trade discounts are not listed on the book separately, they're just netted out. So we are going to take the 2,000 times 10%, which gives us 200, and we're going to subtract that out. So that's going to give us $1,800 as the net amount that we're going to record on our books. So let's go ahead and record that. Let's journalize this purchase down here. Since it's a purchase of merchandise for resale, I'm going to debit purchases. And then I'm going to credit accounts payable Jacob's Distributors. And I am going to enter that purchase for the net amount of $1,800. Okay, so that is probably going to be a lot of question on your quiz and maybe even your exam, is when you have a purchase with a trade discount, you enter it at the net amount, the amount minus the 10% discount. Okay, number two says calculate the amount to be paid on this invoice within the discount date. Okay, so since we've earned this 2% discount because it was paid within the discount date, we've got $210 net 30. So we have a discount of 2%. Now the 2% is not going to go against the 2,000, it's just going to go against the 1,800. So 1,800 times 2% will give us a $36 discount, and if we subtract that from the 1,800, we're going to make our payment for $1,764. Now we need to journalize this payment. All right, so since it's a payment, we're going to, maybe it's here, credit cash for the $1,764. We're going to debit accounts payable for the full 1,800 because we need to zero out this 1,800 that we increased our liability by. So this 1,800 fully offsets this 1,800, so our account is clear. And then we're going to make a separate entry for the purchase discounts. Okay. All right, the next one will be number 3. Okay, and this one deals with discounts as well. So we're going to use T accounts to enter our debits and credits instead of the journal. So the first one says the purchase of merchandise with cash. Okay, so the merchandise is purchased for $1,500. So in purchases, on A, we'll enter $1,500, and then we'll credit cash for $1,500 because it was a cash purchase. And then on B, it says merchandise listed at $3,500 less a trade discount of 15% is purchased for cash. Okay, so $3,500 times 15% gives us a $525 trade discount. So if I back that out of $3,500, I know that I'm going to enter my purchase for the net amount. So not the $3,500. If there's a trade discount, remember to go ahead and back out the discount and enter the purchase at the net amount. Okay, we'll go to 2. This is a purchase of merchandise on account. So merchandise is purchased on account with credit terms 210 net 30 for 2000. Now we would not enter our cash discount at the point of the purchase because we don't know when we're going to pay this bill. We're just going to enter that we made a purchase and we have a bill. So it's 2000. So debit purchases for 2000 and credit accounts payable for 2000. On B, merchandise is purchased on account, credit terms 310 net 30. So I'm going to enter that purchase now. And I think that was 1200. On C, payment is made on invoice A within the discount period. Okay, so at the point of payment is when you record the cash discount, and it goes in an account all its own. It goes into the purchase discount account. So we have 2000 with the 2% discount, and that's $40. The first thing I'm going to do is debit accounts payable to offset the 2000. Remember, we always want to clear out our accounts payable, so whatever went into accounts payable has to come out. Okay, and then I'm going to credit cash for $19.60. That is the 2000 less the $40 discount. Okay, next I'm going to purchase discounts and credit purchase discounts for the $40. So in this account we're showing where we've earned the discounts for early payment. And on D, payment is made on invoice B, but it's too late to receive the cash discount. Okay, so on B, I'm just going to have to pay the full $1200. So on D, I'm going to clear out the $1200 out of accounts payable. $1200 went in, so when I pay it, the full $1200 comes out. And then on D, I'm going to credit cash for $1200. Okay, now on C, we've got merchandise purchased on account for $4000. Okay, it has credit terms, but I'm not going to pay those any attention right now. Those only come into play when we pay. Merchandise is returned for a credit before payment of $500. Okay, we have a purchase return and or allowance here. So this is a purchase return. So I would really just turn this purchase entry upside down. So since accounts payable was credited for the purchase, I'm going to debit accounts payable for the amount of return. And then instead of crediting purchases, I'm going to credit purchase returns and allowances. Okay, so now my balance in accounts payable is $3,500. So it says payment is made within the discount period. Now we had a return, and so the amount owed is $3,500. I'm not going to take the 2% against the $4,000. I'm going to take the 2% against the $3,500 owed. All right, and that's $70. So I'm going to clear the $3,500 out of accounts payable. That's what's left after the return. I'm going to make a payment of $34.30 because that is the $3,500 minus the $70 discount. And then in the purchase discount account, I will enter the $70. So we have a debit for $3,500, a credit for $3,430, and a discount of $70 that we're going to credit. Okay, in 4, the purchase of merchandise with freight. So merchandise is purchased on account with $2,500 plus freight charges of $100. Terms of the sale were FOB shipping point. So if the sale was FOB shipping point, then I know that I need to pay the freight charges. I'm the buyer. So it was free on board until it got to its shipping point, and I have to get it from the shipping point to me. So it's purchased on account. So I'm going to debit purchases for $2,500, debit freight for $100, and then credit accounts payable for $2,600. Let me change this to A. Okay, on D, payment is made for the cost of merchandise and the freight charges. So this is just a payment on account where I'm going to debit accounts payable for the amount owed and then credit cash for the amount owed. Okay. Now we'll move to exercise 11.4, and we're going to calculate the gross profit. So I have put together a little spreadsheet here so that we can kind of follow this calculation process. So here's the problem. We're going to use these figures and now calculate the gross profit. So step 1 is to calculate the net sales, and we learned this back in chapter 10. Net sales is just sales less returns less discounts. So I'm going to put in $120,000 in sales. I'm going to put in the sales returns and the sales discounts. So our net sales is $118,450. That's sales minus sales returns minus sales discounts. So it's a total deduction from sales of $1,550 to give us $118,450. Okay, we're going to set aside the sales calculation for a minute, and we're going to take steps to calculate the cost of goods sold, because we need to calculate cost of goods sold to deduct it from the net sales here. And that will give us our gross profit. So first we need to figure out how much we purchased in inventory for the period, probably for the year. So we're going to look at our purchases account, and it's telling us that we purchased $77,600 in inventory. And then some of that got returned. We returned $4,100. And then we returned, or we had $2,300 in discounts, so you know that reduces our purchases as well. And then we paid freight. And remember, freight adds to the cost of your purchase. If you've ever purchased anything online, you know the freight charges can be kind of expensive sometimes. So we have to add that freight back. So the cost of the goods that we've purchased is $72,450. So that's purchases minus returns and allowances minus discounts plus the freight. Okay, so we know we have at least $72,450 worth of merchandise in our store to sell. But we also started out with some inventory. So it's telling us here that we started out with $35,000 in inventory. And we purchased more, the $72,450 that we just calculated. So our goods available for sale are $107,450. Okay, that's everything we could have sold to our customers all year long. So if we had this much in our store and we take an ending inventory and we've got 32,000 still in our inventory, that means we must have sold 75,450. Okay, let's look at that again. Everything we had to sell for the year was 107,450. At the end of the year, we've got 32,000 left. So 75,450 is missing. That means we've sold it. Okay, so now we know our cost of goods sold, and we can just bring that net sales down that we calculated earlier and subtract the cost of goods sold, and we know that our gross profit for this period is $43,000. So my customers gave me $118,450. The cost of the inventory that I sold them to me, my cost was $75,450. So my profit is $43,000. Now there is a lot to subtract from there to get to our net income. You know, we'll have to subtract other expenses like wages, supplies, utilities, depreciation, all the other costs of doing business to get down to our net income. But this is a very important section on your income statement now. This is your revenue section. So you really need to get familiar with this because we'll be using this calculation in the next several chapters. So now we'll move on to problem 11, where we will go through the journalizing and posting to the general ledger and the accounts payable ledger. Okay, so we'll just journalize a few entries and then go through and post those. On July 1st, we issued check number 414 in payment of July rent. So that is a transaction that you've done many times before. When we pay the rent, we debit rent expense, and we've paid it, so we're going to credit cash, and that was for $2,500. Okay, so let's go ahead and post this and get it out of the way. We're going to debit rent expense for $2,500. So we'll go down and find the rent expense account. That was July 1st. Our posting reference is J16. And the amount was $2,500. There's no other balance to take into account, so we're going to just move the $2,500 over to the balance column. We'll go back up and put in the posting reference, 521. Then we'll go to the cash account and enter the credit for $2,500. Okay, so July 1st, J16. We have a credit of $2,500. We already have an existing balance of $21,000, and we're subtracting $2,500. We have a debit and a credit, so we're going to subtract, and we'll end up with a debit of $18,500. So we'll go up and enter account 101 to show we've posted it. All right, the next entry. On the 1st, we purchased merchandise on account from Tilly's Toys, invoice 311 for $2,800, terms 210 net 30. Okay, so we're going to go to our journal and increase the purchases account for $2,800. And then we'll increase accounts payable Tilly's Toys with a credit of $2,800. Remember, accounts payable is increased with a credit. So let's post those now. We'll go to the purchases account, which is a cost account. Okay, and we'll increase our balance by $2,800. There is no existing balance. Okay, and then we will go to accounts payable. Oops, here we go. That's accounts payable's ledger actually. So let's go up here and find accounts payable, the account. Okay, we're going to give it a credit for $2,800, and it doesn't have an existing balance, so we'll bring that balance over to the credit side. And now we need to go to Tilly's Toys and increase it by $2,800 with a $2,800 credit. Okay, so we've journalized the accounts payable. We've journalized the purchases, and now we need to update Tilly's Toys accounts payable ledger. So we'll scroll all the way to the bottom where the accounts payable ledger is. Find Tilly's, enter July 1st, the posting reference, a credit of $2,800, and put the balance of $2,800. So anytime we have a balance in our accounts payable ledger, we know that that balance represents a credit because this is the accounts payable ledger, and accounts payable is increased with credits. That's the normal balance. Okay, July 3rd. Purchase merchandise on account from Shear & Company, $3,300 with terms of $110 net 30. So remember, we're not bothering the terms right now. Those come into play later on when we make a payment. So once again, we have purchases and accounts payable Shear, and that was for $3,300. Okay, let's go update our accounts now. We're going to debit purchases. On the 3rd for $3,300. So $6,100 is our balance. We've got a debit and a debit, so we add and get our debit. Then we'll go down to up to accounts payable and enter the date and the posting reference and the credit of $3,300. So now our balance is $6,100 in accounts payable. We have a credit, an existing credit, and another credit will give us a credit of $6,100. We'll add those two together. Okay, and this was for Shear & Company. So we're going to go ahead while we're down here and scroll down to Shear & Company, January 3rd, posting reference, and that credit was for $3,300. So we're going to increase this vendor account by $3,300 and then come in and enter the posting references. So purchases is 501 and accounts payable is 202. On the 5th, we had a return. We returned merchandise from Tilly's Toys and received a credit memo on the amount owed of $300. Okay, so here is our original entry to Tilly's. So when we have a return, we're just going to turn this entry upside down. So accounts payable Tilly's for $300. That reduces the accounts payable or the amount owed to Tilly's. And then we're going to credit purchase returns and allowances. So remember, never mix your returns into your purchases account. They will always go into their special account, purchase returns and allowances. Okay, so now let's do the update. Accounts payable comes first, so we'll do that one. July 5th, the posting reference. This time we have a debit to accounts payable for the return of $300. So $6,100 minus the debit of $300 will give us a balance of $5,800. Okay, so we have a credit and a debit. We subtract the two. The credit's higher, so it's staying on the credit side. We'll go down to purchase returns and allowances and enter the credit of $300. Remember, purchases has a normal debit. Purchase returns and allowances is a contra account, so it has a normal credit. We'll just move that credit over. And now we need to update Tilly's account. So accounts payable was debited to Tilly's. It was on the 5th. So we're going to debit their account for $300. So we now owe Tilly's $2,500. So originally we had a $2,800 credit. We gave Tilly's account a $300 debit. So we subtract those two and we end up with a $2,500 credit. So we'll put our posting references in here. That's 202, and then purchase returns and allowances is 501.1. If purchases is 501 and purchase returns and allowances is a contra account, we'll put 0.1 after it. Okay, and then let's see, we've got another purchase here on the 8th. Purchased merchandise on account from Donna's Dolls for $2,900, terms 210 net 30. Okay, so purchases and then accounts payable. That was $2,900. Okay, let's go update the accounts. We'll credit accounts payable on the 8th. For $2,900, we have a credit and a credit. So now we have a total in accounts payable of $8,700. We'll scroll down to purchases and debit purchases for $2,900. Okay, and now we have $9,000 in our purchases account. A debit and a debit you add, and we got $9,000. All right, then we're going to go down to Donna's Dolls and credit her account for $2,900. And that'll give her account a $2,900 credit balance. So now we'll enter our posting references. Okay, on the 11th, let's see. Issued check to Tilly's Toys for merchandise purchased on account, less the return and less the discount. Now sometimes the statement will not tell you to subtract out the return or the discount. You'll have to know. So if we go back up to Tilly's, we see two things. We see one, that they get a 2% discount if paid in 10 days. Well, 10 days from the 1st is the 11th. So they did pay within the 10-day period, so they will get the discount. You'll have to figure that out yourself sometimes on some of the assignments. And then there was also a discount. So that 2%, or excuse me, a return, the 2% discount will be applied to the $2,800 minus the $300 return here. And if we're unsure about how much we owe Tilly's, we could go back down to the ledger and see that we owe them $2,500. So that is the amount that we're going to apply the 2% discount to. So $2,500 times 2% is $50. So on our payment, the first thing we want to do is completely zero out the accounts payable to Tilly. So we're going to zero that vendor out with a debit of $2,500. We are going to credit cash for $24.50. That's the $2,500 less the $50 discount. And then in the purchase discounts, we're going to enter the $50. So now let's post this debit to accounts payable and the debit to Tilly's. Okay, here's accounts payable. That was dated the 11th. Okay, a debit of $2,500. Okay, that gives us a balance of $6,200. We had a credit and a debit, so we subtracted. And now let's go down to Tilly's ledger. Okay, on the 11th, we are going to debit again for $2,500, and then that will leave a zero balance in Tilly's account. Okay, and we still need to enter the purchase discount of $50. Okay, and that was credited to $50. And then we have to record the cash credit for $24.50. So we have a debit of $18.05 and a credit of $24.50. So now our balance is $16.050 in our cash account. All right, now we need to put in our posting references again. It's 202. Cash is 101, and then the purchase discount account is 501.2. Okay, let's do the entry on the 13th. Issued check to Sharon Company for merchandise purchased on account less than 1% discount. So here's Shear. We made the purchase on the 3rd. 10 days would be the 13th. So we made the payment on the 13th, so we are eligible for the discount. The original amount was $3,300, so I believe 1% of that's $33. So let's enter that journal entry. Okay, accounts payable, we're going to completely zero out the amount owed to Sharon Company with the full amount owed, which was the $3,300. We're going to credit cash for $3,300 less $33. So that's $32.67. And then the purchase discount was $33. Okay, so let's go and post this transaction. Okay, accounts payable was debited on the 13th for $3,300. Okay, so we have a credit balance of $6,200. We debit for $3,300, so we subtract, so our balance is $2,900 in accounts payable. Okay, we'll go back and enter the cash. The cash was for $32.67. So we have a cash balance of $16.050. We're going to subtract the check of $32.67. That gives us a $12,783 balance. Okay, and now we need to enter our purchase discount. That was on the 13th, and it was for $33. Now we need to update the accounts payable ledger for Shear. And we debited their account for the full $3,300, so now that balance is zero. Okay, on the 15th, we returned merchandise purchased from Donna's Dolls and got a credit memo for $3.50. So we have got a purchase return and allowance. So we are going to reduce the accounts payable to Donna's Dolls for $3.50 and then enter the purchase return and allowance for $3.50. Okay, and so we need to update accounts payable the 15th, and let's see, that was a debit of $3.50. So $25.50 is the amount owed, $2,900 credit minus the $3.50 debit. And we'll go down to purchase returns and allowances. For $3.50, and that was a credit and a credit, so that'll give us a balance of $6.50. And then we need to update Donna's account for the return. That was a debit of $3.50. So we have a credit balance of $2,900 minus the $3.50 debit. Okay, so we'll go back up, enter the posting references. Okay, so that would be 202 and 501.1. And then we need to enter these posting references as well. All right, we're going to the next page of the journal. We're going to issue the check to Donna's Dolls for the merchandise purchased on account, less the return, less the discount. Okay, so Donna, we made the purchase on the 8th. If we add 10 days, that's the 18th. So we are eligible because we cut the check on the 18th. So originally, Donna's was $2,900, and then we had the $3.50 return, so we are owing her $25.50. Let's double check that with her ledger. I think that was right. Okay, here we go, $25.50. And we are going to apply, what was that discount? 2% discount. So we're going to apply that to the $25.50. That's $51. So we are cutting a check for $24.99. We're moving to a new page. Purchase discounts. We'll come back to that. The cash was $24.99. And accounts payable, we'll need to clear her accounts payable completely out. I think it was $25.50, and then the purchase discount was $51. Make sure that balances, and it does. Okay. So now we'll post to accounts payable and then to Donna's account. So we're going to go and enter on the 18th. And that was a new page, so we're going to change the posting reference to J17. And we're going to enter a $25.50 debit to accounts payable. So we have a credit of $25.50 and a debit. So now the balance in accounts payable is 0. And now we'll go down to Donna's and post the debit. Let's go right past that. Okay, so now her account has been zeroed. Now we need to post the purchase discount. So we have a credit and a credit. gives us $134 in the purchase discount account. And now we need to record the credit to cash. So that's on the 18th. That credit was for $24.99. So we've got $12,783 in cash. We're going to subtract $24.99 and we get $10,284. Okay, everything's been entered, so we'll put in our posting reference. The only remaining entries are 3 purchases on account. I think we've done enough that you should be comfortable with accounting for merchandise purchases and payments.